Hello and welcome. It's a Thursday trade right here in Lagos, Nigeria. I hope you're in profit, and definitely we're still watching these markets at this point. Are you going to go long or go short? I guess you have to make that decision yourself. But let's flip straight into the markets now. We're seeing crude oil prices are rising again, yet still struggling to break the $100 mark as easing geopolitical tensions. That's cooling, supply fears there. But we see $96.42 a barrel, 1.15% higher for Brent crude, and we still have normalcy when it comes to Brent crude price and WTI. WTI is back cheaper, and that's continued for about 3 days now. 92.48, 1.30% higher. So we'll see if they break above 100 again, but both benchmarks settled little change yesterday after trading in a wide range, during the session. Let's flip over to metals now. I see gold prices, they've crept higher today as persistent weakness in the dollar. That's, benefited metal markets, with focus remaining more on, potential ceasefire talks between the U.S. and Iran. That's what everyone's focusing on at this point. And we see spot gold 0.6% higher, $4,830 per ounce. Spot silver, marginal rise there, holding on to the $79 range there. Might make a move to 80. Platinum, 1.10% higher, the biggest mover for the metals that we track, $2,151. And we see copper there holding on 0.16% higher. So that's a picture right there. Definitely, these assets get a lot of attention. When we see oil prices going higher, these days we see gold going lower, but now we're seeing both rising at the same time. But we'll see if that continues at this point. To other stories now, Zimbabwe's financial markets are witnessing a historic shift. The country's dollar-denominated Victoria Falls Stock Exchange has now overtaken the 132-year-old Zimbabwe Stock Exchange in total market value, marking a major realignment in investor confidence. The surge is being driven by a $1 billion mega listing as more companies migrate to the dollar-based platform and, amid persistent currency instability right there in Zimbabwe. And we see Uganda is making a bold move to revive one of its most ambitious infrastructure projects. The government has appointed global banking giant Citibank to help raise 2.7 billion euros for its long-delayed railway linking Kampala and to Kenya. After years of stalled funding talks, fresh backing from international lenders could finally get the project on track, unlocking a key trade route to the port of Mombasa. But a big question remains: can Uganda finally secure the financing needed to bring the mega rail project to life? We see the World Bank has launched a major new initiative, Water Forward, aimed at delivering water security to over 1 billion people worldwide. With 4 billion people already facing water scarcity, the program is racing to mobilize billions in funding and fix failing water systems across Africa, Asia, and the Middle East. And to other commodities now, we see tobacco revenues have jumped about 37% to around $540 million, even as global prices continue to fall. We see the surge is being driven by a sharp rise in production volumes, highlighting strong output, but also raising concerns about farmer margins and long-term sustainability. Definitely see that's for Malawi. One of their major export commodities there, that's tobacco, and they're making a 37% turnaround jump in profit from exporting that to the world. All right, to our first conversation now. Rice, a staple on Nigerian tables, is seeing a surprising shift. Prices have dropped sharply by 28% year on year, bringing a 50-kilogram bag down to about 65,000 naira in April 2026, offering some relief to households and aligning with easing food inflation. But behind the decline are deeper forces from local production trends to global market dynamics, raising key questions about sustainability and what lies ahead for both consumers and farmers. Let's talk to Toju Megason now, analyst with financial derivatives company Great to have you in the show, Toju. So what are the key drivers behind the sharp drop in rice prices, and is this decline sustainable in the coming months?
Oh, Finladi, thanks for having me. Yes, as you've highlighted, we've seen a significant drop in the price of rice year on year, by 28%, from selling at 90,000 naira to around this time last year to 65,000 recently. This primarily stems from heightened import volume, as this has been encouraged by the stabilized naira that we've experienced in our economy recently, alongside a fall in global prices in major a fall in global prices of rice in major producing countries like India, Brazil, and Indonesia. Alongside this, we've also had a slight increase in our rice production locally, as we roughly produce about 5 to 8 million metric tons annually. So this has overall contributed to the overall supply in the nation. In the near future, I do expect prices to dip even further, as the federal government has recently introduced a new duty policy that would actually reduce the percentage on the tariff on rice from 70% to 47.5%. So that would obviously overall reduce importation costs, which is obviously going to be passed on into consumers through the retail price.
You know, other types of rice now, it seems Ofada rice still commands a steep premium. That's local Ofada rice. What does that reveal about Nigeria's domestic production and value chain challenges?
Well, with regards to Ofada rice, its steep pricing or its peak price, and why it's priced as a premium is due to its nutritional value. It's very rich in fiber, minerals such as magnesium and zinc, compared to that of white rice, which is relatively lower in nutritional value. Coupled with the fact that there's actually a limited supply as well, due to its traditional farming and manual processing methods used in cultivating Ofada rice. So this scarce demand obviously then this scarce demand met with the relatively high demand for Ofada rice then obviously puts an upward pressure on the price of the good itself.
All right, thank you so much, Toju Magazine. We'll definitely keep tracking these prices, but it's been interesting. Most of April, we've been reporting lower prices for some of these commodities. Thank you so much for joining us today.
We'll continue. Thank you for having me.
All right. Okay, let's get a check on the markets now. On the continent, we're seeing trading in Africa. The NGX still on fire. 0.24% higher, 209,000. At some point, it did touch 210,000 points. Still on price discovery right there. And we're seeing stocks like MTN Nigeria getting a lot of attention, Access Bank, Zenith Bank. MTN Nigeria, that rose yesterday, coupled with Airtel. So we see the communications telecom giants there rising, and that might continue at the close of trade today. Johannesburg Stock Exchange, on the flip side, 0.30% lower, even though we see for the metals market there's some relief there with gold prices, but the JSE still pressured at intraday. Let's flip over to other markets now. I would say for the EGX 30, 1.04%. It was also higher, about 1.5% up yesterday. So that positive sentiment continues. And the Nairobi Stock Exchange closing in the green yesterday with 0.21%. Then markets in the Gulf region, they're trading mixed today as investors are weighing, growing optimism of a possible deal to end the Iran war, with sentiment supported by rising U.S. pressure on Tehran ahead of, further talks. We see Dubai's main share index, a big 1.4% lead there. And we're seeing that because of a 2.1% rise in blue chip developer MR Properties again, and a 2.1% increase in Telkom Group. Then moving on to Saudi Arabia, we're seeing the Tadawul there. That dropped about 0.44%. With the Saudi National Bank, that the country's biggest lender by assets, that lost about 2.1%. One major oil major, Saudi Aramco, was down 0.3%. So that's all we see for the Tata Wool there, down 0.44%, and the Qatari index 0.31%. Moving away from what we're seeing in the UAE. Then we see for the U.S. stock futures, we're marginally higher today after both the S&P 500 and NASDAQ Composite rose to fresh records during the regular trading session. But now we're getting a mixed sentiment here. It's positive, but marginally. So we're still seeing investors looking for direction right there. But the Dow Jones Industrial Average leads at the time we took these numbers. Let's flip over to Asia markets now. I will see it's firmly in the green. They've had a good week, this week. That's starting from Tuesday. That's in Asia. With the Nikkei, the Kospi, again, over 2% close. Hang Seng Index, almost 2%, 1.72%. If flip over to the Nifty 50, I feel like the Nifty 50 should be topping maybe back to the 25K level at this point after adding over 1% yesterday, but no, that's not happening. It's down 0.14%, 24,196 points for the Nifty 50, and the Shanghai Composite 0.70 higher, 4,055 points. Let's flip over to Europe now. Let's see what's happening over there. We have Chiponda Chimbelu. Great to have you, Chip. How's it looking? I'm guessing it's also green on the screen in Europe.
Yes, Ladi, it is indeed green on the screens here in Europe as well. And the Stock 600 is up around 0.4%. And Germany's DAX is also higher at 0.7%. Of course, there is the growing optimism that you mentioned there about a potential resolution to the Middle East conflict. Of course, U.S. President Trump has said talks between Israel and Lebanon will be taking place today. And the Financial Times also reported a ceasefire could be announced soon. And that is, of course, helping lift market sentiment in Europe, as well as investors here continue to assess corporate earnings and how they could provide some crucial insights into how companies are performing amid the ongoing geopolitical uncertainties. And it does look, Ladi, like the Stocks 600 is actually on track to recoup all the losses it has incurred since the outbreak of the Iran war, as investor sentiment continues to improve. But of course, there are still concerns here in Europe over rising oil prices and how they will affect the economies here, which of course rely heavily on energy imports. And that is what is causing European equities to underperform their Wall Street counterparts.
All right, let's flip over to another story now that has to do with kids and the internet. I see the European Commission, they've announced a new age verification app as part of an effort to better protect children online. What can you tell us about this age verification app?
Well, Ladi, the EU says that it has this new age verification app and that it is also technically ready for use. Now, the app is designed to meet the strict requirements and rules which are part of the EU's Digital Services Act. And European Commission President Ursula von der Leyen announced the app on Wednesday. Now, this announcement could also be seen as an effort by Brussels to prevent EU countries from going their own way in efforts to protect children from harmful information online. There are several European countries that are already looking at how they can ban or restrict social media use for children. And of course, many of these attempts were announced earlier this year as a response to the outcry the outcry that was following that international outpour regarding AI, the AI tool by Grok, which produced sexualized images of people without their consent. And that also included, of course, images of children. So when the EU's age verification app is deployed, users will actually be able to prove their age to access legally restricted sites here in the European Union.
Yeah, because, definitely we need to protect our kids online at this point. Even though I hear my 11-year-old asking me what the Strait of Hormuz is, because she keeps seeing it all over the place at this point. But how will this app actually work in practice?
Well, the idea, Ladi, is that users here in Europe will be able to download the app from an app store and set it up using proof of identity. And that would be something like a passport or a national ID card. And once they have done that, they can use the app to confirm that they are above a certain age when accessing online content that is restricted within the EU. Now, the tool is actually anonymous, so the identity of users will not be revealed. And according to the European Commission, the system is similar to digital certificates that were used across the European Union during the COVID-19 pandemic. Now, during that time, of course, Brussels released an app which allowed EU residents to prove their vaccination status. Now, the age verification app is expected to support enforcement of the Bloc's Digital Services Act, which aims to better regulate online platforms. And that includes, of course, restricting access to content such as pornography, gambling, and alcohol-related services. Now, Brussels says this age verification app is built on open source technology, so that could mean that it could also be potentially deployed outside the bloc.
Quite interesting. EU always trying to protect the bloc. Thank you so much, Chip. We'll see you again tomorrow.
Thanks, Ladi.
All right, let's get a check on the crypto market now. Definitely markets, some markets, getting some relief. But we're seeing Bitcoin trying to struggle back to 75K and maybe above that. But, we're having pullbacks, here and there. But it's green now, still volatile. 74.65, still maintained. Ethereum holding on to $2,300. Some analysts there expecting another run for Ethereum, maybe to about $3,000, but we don't know if the sell pressure is over yet, when it comes to Ethereum. XRP, Solana, most of the top coins on CoinMarketCap in the green at this point, and a few pockets of red with some stable coins in the red. We've seen pull out, investors pulling out some funds there. Let's look at some of the headlines now, some top stories. I was seeing BlackRock. They've added $505 million in Bitcoin to purchase over $500,000 worth of Bitcoin as institutional demand returns and the BlackRock IBIT begins to thrive again. BlackRock has put its extensive Bitcoin selling spree on hold as the crypto ecosystem begins to rebuild momentum amid renewed investor interest. While the market has begun to see rising optimism from retail investors, recent massive Bitcoin purchases from, BlackRock suggest that even institutional investors are becoming, highly optimistic. And then we see exchange inflows that spiked as Bitcoin is trying to face $76,000, but it's facing a significant headwind, trying to get there, and it could slow down or halt the ascent, according to recent reports. The leading crypto is currently trading at around, 74.5, 74.3. up 0.4%, but investors are carefully watching if it can surmount and get back to that level. Now, we see JP Morgan CEO Jamie Dimon has dumped about $40 million of JPM shares. Investors still in the crypto space, still watching what's happening there. Stock insiders have shown that this trade actually happened. Among the bank's senior personnel, the largest insider trade by far came in the form of CEO Jamie Dimon selling staggering 130,000 JPM shares. Furthermore, given the average sale price amounted to about $306, that's, the veteran executive has raised more than $40 million from this sale. But let's bring it back to the crypto market now. We have Gilbert Jopata now is a lead at Smart Investor Lodge, joining me via Zoom. Great to have you, Gilbert. So we're seeing big money coming back into Bitcoin with BlackRock adding half a billion dollars to that's purchasing Bitcoin. It's been a while we heard some of these big purchases. How are you seeing what's playing out so far?
Well, right now we are in a very interesting phase of the market. We are no longer in the hype-driven phase. We are in a place where smart money is accumulating, and what this means is simple. While the public is confused, fearful, you could still see experienced investors are still quietly positioning in the market for ahead of the next phase. of the market. But what's happening is that we are also seeing a mix of consolidation and also selective growth in some assets. We could see major assets like Bitcoin, Ethereum. Like Bitcoin is going to look for the upper liquidity within that 75K and 80,000. At the same time, we're also seeing selective growth, a massive pump in asset like RAV. You can see RAV move from 0.3 cents to about $15. But then this is always very typical before a major bullish expansion in the market. But then I still think people should be careful, because endless pump like what we see in some of these selective growth assets, we are not just looking at the next moonshot. It's actually a liquidity trap which is happening. So the goal, I think any investor who is entering is that they should not just believe in the hype, but they should recognize, set up, and stay in the right side of the market before a crash, which the market will make.
All right, so what's happening with the meme coin fever? Is that gaining ground again? Definitely, we've seen, those meme coins not getting that much attention, so far. What's happening there with the degens?
Well, DGens are always active. They're always in the trenches, regardless. But right now, the market is heavily driven by AI narrative. AI narrative right now is driving the market. And memes is still part of the culture. We can't take away meme from cryptocurrency. Meme is part of the culture. But I think that there were a lot of liquidity extraction that was done in the wrong way within the last phase. So the meme is still there, and many persons are still positioning regardless. But the market is more driven towards and inclining towards AI-driven narrative at the moment.
All right, so there's still a lot of talk about artificial intelligence. But, at this point, when you look at major cryptocurrencies, top 100, and you zoom out in the whole market, there are over 4 million coins claiming to do one thing or the other, or be the next Bitcoin. But are we getting into a phase where attention will be firmly on maybe the top 100 cryptocurrencies, listed, and maybe that trickles to just Bitcoin and Ethereum at some point, and maybe XRP, maybe top 10?
Well, I think that despite that, when you go to CoinMarketCap, you can see top 10, top 200, top 1,000. There are persons who, when they go into the market, don't even look at CoinMarketCap, to get into the market. They use Dex Screener, some use Meme Launchpad. So attention is a signal. Attention is a signal in the cryptocurrency market. So it doesn't matter whether it's a newly launched token with $10,000 market cap. As long as it has attention, as long as it has community, as long as they are building with the long-term strategy in play, there are people who will always enter into such asset as early believer and also ride it into a moonshot. But then I think regardless of what somebody decides to do in the market, the person should have a plan and a strategy, because yes, the cryptocurrency market is volatile, but at the same time, it's also risky. So regardless of one's investment strategy, regardless of whether one is assessing what the person wants to buy through CoinMarketCap or Dex Screener, it's very important one have a clear strategy. You need to know why you are buying, not just what you have to buy. The second thing is to always accumulate during times of uncertainty. And the third thing for me has to do with managing risks, because managing risks is everything. Never invest more than what you cannot afford to hold through volatility, So regardless, CoinMarketCap is not always what every investor uses. There are people who use there are some people who use Dex Screener. There are some persons who even use the Nigerian version of Fire Screener, where you could see indigenous project and what they are building. So attention is actually a signal in the space, not just the typical currencies that are listed on CoinMarketCap.
All right. So what do you think is the right trade today for Bitcoin, long or short?
Well, Bitcoin Bitcoin has been a long since about $60,000, but right now for me, anybody who already have an entry, this is a hold. This is a hold. BTC has a liquidity around 75, 76 towards $80,000. For me, these places are places one should go short. If 75K gets heavily rejected, that's a short position. But once we get towards 80K, for me, that's a short position. There's heavy liquidity at 80K and another heavy liquidity below $50,000. So for me, I think these are major decisive decision BTC needs to make before we know if we are finally seeing a market capitulation.
All right, thank you so much, Gilbert Jokwaja, team lead, Smart Investor Launch. Thank you for coming on today.
Yeah, thanks for having me.
All right, so that's how most markets are looking today. There's some kind of calm at this point. Some have said, is it a calm before a storm? We'll definitely find out. Keep your ears to the ground, and before you make that trade, make sure it's the right trade. Thanks for watching Business Incorporated. I'm Ladi Williams. Bye for now.